Hey everybody, this is Jim at SP500chart.com. It's Sunday afternoon, a little bit before 4 o'clock on December 8th, 2013. We're going to do our weekly review and also take a look at just what happened on last Friday, December 6th, in the S&P 500. Before we do that, I need to remind you, as always, that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting off here on a 30-minute chart, our week started here on December 2nd, and we ended, obviously, with this last candle here on December 6th. And what's kind of interesting is we started the week, let's zoom into a 10-minute chart here, and here's our week. 2, 3, 4, 5, and 6. And we started the week showing what appeared to be a little bit of an inability for the market to get over this area of consolidation right above 1800. And frankly, the beginning of the week really was kind of, was almost very close to do or die. And what happened was we ended up with weakness as the net result on Monday, but a close right on our lower green support line. And if you listened, if you are a subscriber and you were listening to Monday's video, then you would know that I mentioned that when you hit support multiple times without hitting resistance, your expected resistance line, and remember we were in this kind of a rising channel here. Here's resistance, here's support. We had support, resistance, support, can't quite get there. Then we get down on support again. That's where we closed on Monday. And the question at that point really becomes one of, you just have to wait and see if we bounce here or if we break our support line. And obviously in this case, we broke support. Now, there's two things to consider. When you break support, you break support for one of two reasons. You either break support to reverse and start a downtrend, or you break support to just take a few days off from the buying season, take a few days off from that strength shown to get us up to about 1813. Then you mount another rally that often ends up setting a new high higher than where you were before support was broken. And it appears to me that the S&P still wants to go higher. So let's back off a little bit more. What I did was I took a look at these two tops, and then I just snapped a parallel line down here. For what it's worth, it lined up with the last low back here in November, second week of November. You know, that's probably not that big a deal. But the fact that we bounced on this 1778 level, which provided support back in the week of the 18th, the fact that we are now above this trend line that defined our trading at least for a few days right here. Now, albeit we were all over this line at one point or another, it just looks like the market still doesn't have a super clear sense of direction, but it looks like we may be headed up for a back test of this green line. So this is kind of what I would look for coming into. By the way, the week was just kind of, I would call it something of a wash, because we broke this and we did bounce at this same level right here, and I think we talked about the possibility of this setting up a Head and Shoulders top. That is still possible. In other words, if this rally does not exceed the previous high at about 1813 and change this week, if we don't get up into the high teens or 1820s this week, then we could come back down, and if we take out 1778 with a meaningful move, then we would be looking at this playing out as a Head and Shoulders top with a target down at about 1745. I don't really have a target for up here. We've got some trend lines. I think this is a valid trend line that if we reach, I would look for weakness there. We've got this trend line. We've got this trend line. So we've got a number of trend lines on the chart, but currently we don't really have much really in the way of a pattern, unless you want to call the last 4 days one of those right shoulderless inverted Head and Shoulders patterns. You remember we had this one back here that lasted about 3 days long, where we had a dip, a deeper dip, then we got over the level that was in place before that deeper dip. Well, if you look at the past 4 days, we had a dip, a deeper dip, maybe a little second dip down, maybe that picked up a few more shares, took a few more sellers out of the market, but we are currently over that that level that was in place before that deeper dip took place on the 4th. So, but I'll be honest with you, I think that's kind of a stretch. I would not be looking at this necessarily with quite the same interest as I was looking at this pattern over here, because we've got that big gap up that took place on Friday. So what I would do is just watch the trend lines. If we get up and we back test this green line, I would be on the alert for signs of weakness on that back test. Okay? If we sell off and we take out 1778, then I think we would be fully justified in calling this a Head and Shoulders top and looking for a target in the mid 1740s. So guys, it's just a little bit of a mixed picture right now. You can see that the S&P's done a good job coming off those lows at 1780. We just in a couple days we're about 1.5% higher than those lows. But as far as, is there a pattern? Is there some overriding source of strength that looks like it could propel the market upwards? I would say at this point there really isn't. All we have is trend lines. Support, probably support, resistance, resistance, and resistance. So basically, if there is a line underneath us, likely support. If there's a line above us, likely resistance. So let's just see what this week brings us coming forward. We got a nice bounce here, but this line, with that bounce, this line becomes even more noteworthy because it has the earmarks right now of the kind of support. Oops, didn't mean to do that. I meant to do this. It has the earmarks of the kind of support that you typically see in Head and Shoulders patterns. And additionally, often the right shoulder in a Head and Shoulders pattern is a back test. So it's going to be interesting to watch, see what happens this week starting on December 9th, 2013. Guys, I want to thank you for watching the video. I wish there was a clearer, more definitive picture here, but honestly, the most definitive thing that I see on the chart is something that we just need to keep our eye on, And that would be what could be a head and shoulders pattern forming right here inside this rectangle with a left shoulder and a head already formed. But remember, it is nothing until it is confirmed with a break of that neckline. So let's just keep an eye on it, see if we get there in the days coming up. So guys, there's your weekend weekly review. Again, sometimes all you can do is just kind of step back, look at the chart, and say, you know, we're kind of in this point of sorting out. Is this going to go higher, or are we going to come down and take out that neckline? So far, this has been a pretty resilient S&P 500. So let's see if we get a little bit more resilience this week. See if maybe even we can set a new high. But if we come down to 1778, I think that's a line that we have to say needs to hold, or we're going to be setting up some significant weakness to end the year with. So there you have it, guys. Thanks for your time. Thanks for watching, and especially thank you for your support.